Now, Professor, this really has kind of been the parlor game now for quite some time. Whether rate cuts should be factored into valuations, they have been. We're now seeing that dialed back. And when you look at the latest ISM data here, we've gone from a situation where the manufacturing area was weak, at least relative to services. Are we going to start to see a pickup in that? Are we looking at an economy that's healthier than maybe what we thought?
Yes, Romaine, what has amazed, I think, all economists, including the Fed and forecasters, is how strong this economy can be despite very high interest rates, even relative to current inflation. There is a lot of momentum there in this economy. We saw the Atlanta Fed raise its GDP estimate for the first quarter to well over 2%. And this strength is what brought those bond yields up by 12 basis points. I was a little puzzled last week why it was falling because I didn't really see any weakness. Probably end of quarter adjustments, but certainly the strength in the economy is going to lead to these firm rates. And we know that stock prices get discounted at interest rates. And so that will give some headwind to stock prices, notwithstanding. The momentum is so strong in this market. I don't think it's over. I don't think this bull run is over. I think that we have more to go.
And that's been what a lot of people have said here, Jeremy. Even when you look at valuations on a historical basis, whether it's the traditional metrics or you use CAPE or anything else here, there's an argument to be made that pockets of this market are overvalued. But is the entirety of this market overvalued?
No, I mean, you know, we look at the Magnificent Seven, or you call it the Fabulous Four, or just the tech sector. We see 25 to 30 times earnings. You just take out this tech sector. No, remember, there's 10 other sectors outside of tech, and they're more like 17 times forward earnings, which is an extremely reasonable level of valuation and pretty much on par with historical averages. So, yeah, when you say about pockets of reasonable and even low valuations, as we know, once we get to the mid cap and the small stocks, we're talking about, the mid-teens and even the low teens in many of those averages. So if we broaden out over here, we still could have a lot of ways to go in a lot of these stocks.